In this video, I'm going to share with you the price formation pattern of the sources and the spikes. Now, you may be very surprised to hear these two words used in FX trading, but these sources and spikes are price pictures or formations that appear on an FX, a commodity, or a stock chart, and they can offer predictive value for the future path of price. So I'm going to show you in this video how you can use those patterns in your trading, as well as giving some real world examples. I hope you find this helpful.
In this video, we're going to look at how to recognize the saucer pattern and V-shaped reversal patterns. So the first thing we need to look at is how to actually recognize a saucer pattern. Well, the saucer pattern tend to be show this rounding shape that looks a little bit like this. They're very slow, they tend to be gradual, but oftentimes these rounding bottom areas mark significant turning points in the market. And you can see this example here, the turning point lasted for 4 years before the pattern was completed, and you can see the top of the saucer was taken out on this firm break to the upside. So when you want to use these saucer patterns, it's when you first of all recognize the technical pattern like this, and you need to have a fundamental reason for the price of the product or the instrument you're trading to actually appreciate. So the important thing is when to avoid them. You don't just want to be looking for patterns that are like this, that are just spending a lot of time in a low dip, because sometimes instruments, different commodities or stocks or indices or even currencies, they can remain depressed for a good reason for a number of extended months and years. So it can be a mistake. Maybe one instrument that springs to mind is banking stocks. Banking stocks have been very depressed, very low. We've seen a lot of this kind of long action, but as long as interest rates remain so low, the profitability of banks is going to be impacted. So it's very hard for a bank to make profit in this low interest rate environment. So the fundamentals aren't right for banks to appreciate. So the key thing when to avoid them is don't just look for the technical pattern. You want to find a technical pattern with a fundamental reason for upside. So a good example is if you look on the gold chart, you can see that there's this rounding bottom pattern from 2013, around the middle of it, to around the middle of 2019. So about 6 years, this rounding saucer bottom was forming. It was a nice bottom. You can see you got a break at the top of the saucer, clean, hard break to the upside, and we've seen a large extension that's still moving. You can have a look at one of my videos at HYCM's blog.hycm lab, and you can see a video that I recorded in May about the upside reasons for gold. So that's kind of an example where when you're looking at a commodity that has a fundamental reason to the upside, and these bottoming times can take ages, but there can be some powerful moves to the upside on them. Now let's look at V-shaped reversals. Now I'm going to deal with these briefly. The V-shaped reversals are not that common. They happen infrequently, and you tend to notice them on heavy volume. So a V reversal pattern, it's a sudden reversal, takes place with little or no warning at all in some cases, and you can have a sudden price drop. Often the heavy volume is the telltale sign and the key. These turns are obviously very hard to spot in advance. Here's a couple of obvious ones. So the global financial crisis, we saw this heavy V-shaped reversal, heavy volumes. We saw that over the course of 2008, 2009, S&P 500 selling off heavily. We're also here, right in the middle of the COVID-19 crisis around March. So that heavy selling in equity markets on the basis of the COVID-19 pandemic spread impacting global growth and all the concerns that were around that. Now, just narrowing down, looking down at the daily chart, you can see, look at that move, okay? Heavy volumes, as we've seen, that's more recently. Heavy volumes moving down the equity markets and then reversing to the upside. So these V reversal patterns, they're harder to spot. The best way of trading them is in a situation when if you've got a sudden sell-off, but that reason for that sell-off is invalid, that becomes a good opportunity for trading them. So an example would be often President Trump's tweets have resulted in these sort of mini V-shaped reversals on an intraday chart, and then often those reversals are being faded. Maybe something President Trump has said has been maybe a bit exaggerated, a little bit over the top, just something that is more sensational than necessarily having any substance that's going to materially impact the markets in a way that a fundamental news flow normally would. So that's the only way you can sometimes trade them. Otherwise, these V reversal patterns are very difficult to trade. You can't easily tell when they're going to happen. So there's something to be aware of, rather than necessarily being great trading opportunities. Obviously, there's examples there's intraday examples within these patterns, and when you know the fundamentals, you can take trend line breaks and the rest of it. But on an intraday basis, when you get these sudden V-shaped reversals, they're often too quick to do anything about it unless you are using a professional news squawk and you know the reason for the fundamental shift. Please do, if you like this video, follow me on Twitter. Here's my Twitter handle, Giles Coghlan @CCA. You can follow me at LinkedIn, and you can also send me an email here, giles.coghlan@hycm.com, and I'll get that. And you can contact me directly for some great programs I've put together to help traders take their trading to the next level. So if you want to marry fundamentals and technicals and risk management all together, as well as your trading psychology, contact me. I've put together some programs to help traders do that. I hope that's been helpful. If you like this video, please give me a thumbs up, a like, share. I appreciate that. So thank you for your time and listening, and I hope to be in touch with you in the future. Goodbye.